chart patterns, we're going with Forex because Forex has most of the patterns. What I started with and learned, and it's where I saw all the like a lot of patterns. You definitely don't need to know all of them, right? Look at all these. This isn't even all of them either. There's so many patterns. Look at this video says 29 chart patterns cheat sheet. There is no way in hell you're gonna know 29 patterns off the top of your dome and use them all. There's just no need. It's unnecessary. I'm not gonna lie. We're only gonna stick to what we need to know, which is like a handful. It's like a dozen. It's really 7 actually, because I just did this. It's 7 patterns, and it's really 4, but they go both ways. They go in both directions. One's bullish, one's bearish. So it's really like 4. We're gonna focus on head and shoulders, the inverse head and shoulders. So this is an uptrend, and it's a reversal pattern because it's telling you market's most likely going to go down, or it doesn't always have to do that. Continue going up. Market does what it wants, but probability wise, it should go to the downside maybe 6, 7 times out of 10, maybe 8. Same thing for inverse. It's a downtrend, and then it does this. It turns into an uptrend. Double top looks like an M. You know, almost equal highs if not almost equal. You know, again, start of an uptrend and continues downward. Double bottom, downtrend, equal lows, up, and this is going to be done at support. This is at a support, sorry, at a resistance. So it's gonna. I'll show this actually. I'll just show it. We have a triple top next, a triple bottom, and we'll go over flags. None of this cup and handle bullshit. I remember when I was first learning, I'm like, oh, a cup and handle would draw the damn thing out, bro. Come on. Come on. You don't need to know all of this. But some of these are, I will say, some of these do work in other markets. For example, crypto. I'm in another group on Discord, and the person who runs the Discord, he trades Bitcoin and all his coins using ascending triangles, descending triangles, pennants, rising wedges, you know, in that nature. You know, I've never heard of a broadening triangle. A symmetrical triangle, though, I have heard of. Falling wedges, like the triangles, the wedges, it works very well. I've seen it. It makes sense. It works out even from an investing standpoint, a long-term holding standpoint. It works in that case. In Forex, it kind of works. Not really for me in my strategy. My strategy works well with head and shoulders, you know, things that rely on support and resistance versus trend lines per se. So 1, 2, 3, 4, 5, 6, and 7. A flag. This is a bullish flag, and then we have a bearish flag, which is the opposite. With that being said, I just typed in Forex patterns. There's a bunch of videos on YouTube now. How to trade patterns for beginner, and about an hour long. My 3 favorites. So there's a bunch of videos you could use. We got candlestick patterns for candlesticks themselves. We'll go over something like that too. So we're gonna get started with the Euro CAD with a Forex pair, just because it's easier for me to spot. I know Forex; it's my bread and butter. I can spot patterns pretty easily now after almost 5 years in the markets. But I will write down our patterns here. Let's go chart patterns. Chart patterns, reversals / continuation. Some of them are reversals and continuation, or continuations. Just depends on how they form. So let's start. So for 1, we'll go double bottom, right? Double bottom, which is a W. 2, we'll go double top, which is the opposite. It's going to be an M, like we just looked at. 3, be triple bottom. 4, whoops, triple top. I can't believe that video didn't save. That's actually crazy. They're just doing this all over again. Triple top, that's how it goes. Double bottom, double top, triple bottom, triple top. We have head and shoulders. inverse, head, inverse head and shoulders. And last we have flags. I'll do bullish. Type on that, I'm going too fast. Bullish / bearish flag. Okay, these are the main 7, I would say, in my humble opinion, the main 7 that you would need to know, and that will be easy for you to spot in crypto, forex, stocks, maybe options. I don't really know about options like that. I know some people who do trade. I follow a bunch of other traders on Instagram that kind of have their own groups, their own mentorships and groups across all different markets. But I'm sure, I would say most of them will know all this off the top of their back of their hand, whether they use them in their strategy or not. I'd say these are the main 7 out of all like the 30, 40, 50 plus that you could definitely find. Like, where was that thing? 28 forex patterns. Like, there's more than 28. There's definitely more than 28. We got 35 on this one. There's a bunch of patterns, right? But I'd say these main 7 are the ones that you'll pretty much need to know, or that you should need to know. So let's look for some actually, let's draw this out. So here's our support or resistance. It really just depends, right? So we have a key level here, 158,000. And let's do a double bottom. So price is trending down. This is an example of both. A double bottom can be both. So here's an example of it in a bearish trend. Lower highs and lower lows. Right? Price comes down into this price point, bounces up, boom, bam, makes a W with a nice little pocket space. It looks like a W for to draw your arrow on it, and it takes off. And that's the simple way. Sometimes one might be slightly lower, like that. Sometimes it could be like that. And sometimes it could just be very wide. It could be big ones that take like a month, 2 months, 3 months to form. A bunch of time to form. It's not to say that it's always going to play out. Like I said, it's probabilistic or probabilities. Trading and being in the financial markets is a game of probabilities. So is investing as well. So just because this makes a double bottom doesn't mean it has to play out in that direction. It could easily just go like that, right? Bing bing, or it could have never made that move and just went kind of halfway and then went. It could have really just formed an M instead, right? Like that. Right? So it's a tricky game. It can be a little tricky, but as long as you see it, you can just play both sides. Right? See how it could be an M now? It was a W at first. You can play both sides. If you're trading, you could take your buy here, and then you could acknowledge that there's a possible M right there, and then you could sell it right there. Okay, so that's a W, and this is in a reversal stance, reversal instance. It can also happen from an uptrend already. It could be trending upward, break above, boom, tap, come back, and go. Right? This is still a W. It looks a little ugly. Still a W. Make it look better, but it's still a W. It's a little W. As long as it looks like a W, you don't want something that looks like this. Like that's not a W. You can't draw that. It's not a W. Right? Not that you can't draw that. You can't consider that a W because it just doesn't look proper. But it could be in an uptrend. Break above, retest as a support, boom, boom, gone. Right? Going on a triple bottoms, it's the same thing, just one more tap right here. Boom, boom. 1, 2, 3. Triple bottom. Triple top, same exact thing. Let's move this like this. Same exact thing. Just like that, right? Boom, 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 boom. This is more so a reversal. But it could also be in a downtrend already, and it just comes down, does its thing, and then it turns into this. Right? It just turns into this. Comes down, breaks below the support, turns it into resistance, test 1, test 2, test 3, continue lower, triple bottom. So I just put both. These are considered reversal patterns, I'm pretty sure, if my memory serves correct, but they can also be continuations. So that's triple bottom, triple top, simple as that. Head and shoulders. Head and shoulders looks exactly like this, except I'm going to move this up a little higher. Except the middle one is going to be higher like a head, literally like a head. You see? Got left shoulder, head, right shoulder. There's actually a weird tool in here that actually draws them for you, some of these patterns. Let me see. Head and shoulder pattern, right? So one. Alright, look at that. And this is called the neckline right here, this dotted green line. It's called the neckline. See how it shadows it in? Just a tool that like kind of highlights it for you if you wanted to be a little fancy. I kind of used to use it. You don't need to use it. As long as you see it and understand what's going on, you're good. But just for fun, I changed mine. Yours might be like red or something. I don't know. It might be a different color. I put mine in green, a little bit transparent. You know, so this is called a neckline. Another trader considers this to be validation. So if the trend price breaks the neckline, then it's a valid um, head and shoulders pattern, and then you could get it down here, or you could call it from the top and get it right here and say this is it. The only thing is that sometimes it could just keep on going, and it could be like a false pattern almost, or it could even reject and then keep going. But again, it's probabilities. And then the inverse is the same exact thing. Oh, whoops. The inverse would just be the same exact thing. And that's you got. Come down, 1, 2, come back up, retest the support, retest as the support because the left shoulder created it, dip below, come back up, retest, verify, and confirm we're at a support, key level, continue, right? Coming from a downtrend to a reversal pattern to an up. The head and shoulders are reversal patterns. There's no continuation on these. You know, in order for it to be a head and shoulder, there's no way you could do that. And then, you know, if it just goes against you, it goes against you. It just wasn't invalid head and shoulder. It made a head and shoulder, but market doesn't have to respect it because it made a pattern, right? And then lastly, bullish and bearish flag. Okay, bullish and bearish flag. It's gonna be a bullish flag. It's gonna be an uptrend. It's gonna look a little bit more impulsive versus like a trending type of uptrend. It'll be something more of like almost a straight move. Whoops. It'll be almost a straight move, maybe like minor pullbacks, but usually it'll be like a straight move, so it resembles like a flagpole. And then it'll come down, bounce, up, and it'll kind of make like a move like that, and then it'll continue up, right? So then when I draw a trend line around this, I didn't draw it that good. So when I draw a trend line like this around it, go like this. Oh, whoops. Like this. So you see, as if you're holding, holding a flag in your hands, you're holding it by its pole, holding it in the air, and the flag's kind of in that downward angle. Literally, your bullish flag right there. So we have a bullish move, and it comes down and starts to make lower highs and higher lows. I mean, lower highs. Jesus, lower highs and lower lows, and then it'll take off and break through the upside. That's a bullish flag right there. Bearish flag is just the opposite, right? So you got a downtrend, pretty much, and then it just starts bouncing the same exact way. Wait a minute, I'm bugging. Downtrend. Hold on, am I bugging? You know what I'm gonna flip this upside down because I'm like psyching myself out. There we go. A little easier. If you need to do this, just right click on the scale, invert scale, and then this will be like Command L or something. Command I or Command L. Command I for invert. Or is it Control I? Sorry. Control I, and I'll do it for you and flip the whole chart upside down. It's still bullish. The blue's still bullish, it just literally just flips it inverse. The reason for that is, I don't know what it is. It's how our brains work. Some people can see things. Some people can be a better seller. Like, it might be easier for you to see something for a sell. Like, you might be able to see double tops better than you see double bottoms or something. Like, things might come out clear to you in that type of sense, like left brain, right brain, or something like that. So it's just a little tip. So yeah, this is the bearish flag. Couldn't draw it. I was like overthinking. But yep, so you're trending downward, and it starts making highs a little bit, and then breaks to the downside. So it's just an upside down flag, right? Okay. So now that we went through these real quick, let's just try and find some live examples. Right, and we're on the daily time frame. I think I actually have like my examples still drawn up, which is good at least. So now it's like fully try and find everything again. But here's an actual slight example of a double bottom. As you can see, we're trending upward. Boom, 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 W, and we go. And ironically, we go straight into a bullish flag. So we see how we have like this kind of move. It doesn't really have higher highs and higher lows. It's very minor. Maybe on the lower time frames we'll see like the higher highs and higher lows. But just for the sake of it being on the daily time frame, higher the time frame, the more probable these moves are, because it's the overall trend. You're seeing it at a way clearer level, or a more broad level, I should say. It's clear on the lower time frame, just a little bit. We have a kind of an impulsive move up, and then we see a move downward. See maybe a slight pullback again. We'll see it easier on the lower time frame, and then it continues up. All right, so we have this, and then you just draw these right here. Command, copy, like that. Right, just like that. And if we were to go into replay mode, if I go to replay mode, and I'll go to like 12 hour, it might look a little bit better. Yeah, it might look just a little bit better, have a little bit more detail in it. But yeah, this is literally a bullish flag right here. It's not as good looking because you don't want it to kind of, hit each side of the channel and break out. But there's not really, not everything's gonna look textbook and how it's drawn out, right? You kind of have to play it by ear in a sense and see if it makes sense to what your bias is and what the fundamentals are saying. So that's a W right there. Okay, let's continue. Oh, right up here at the top right, that's an M right here. Let's draw this out because this is actually a triple top as well. So let me just do body to the wick. Right? Doesn't have to be perfect, but again, 1.52 thousand key level. Alright, boom. 1, 2, that's an M. Luckily, it came up again. That's a triple top now. And if it does it again, that's just another confluence, right? Quadruple top, whatever. There's no real word for it, but it's just another reasoning as to why it should drop. If you were investing, you would see this, you would get in, you could get in over here for a sell, or I guess a buy, but you could take your profits out here. That would be a good way to take your profits out and call like a drop in the market, on whatever stock it is or something. And if let's say you missed this because you weren't looking at it for a few weeks, and then you come back and you see it on September 20th versus August 20th, you could say, oh, well, it made 1 and 2, now it's at 3 again. Yep, let's sell. Let's take some profits off the table. Take your profits, leave your initial balance in from what you started with or something, or take it all out. Because we're expecting an overall move to the downside, we just don't know how big the move will be. And then, lo and behold, September 20th, it starts to drop, you're right, yeah, it dropped a few weeks later, comes back up, the start of November to the same exact level. Notice how it's hitting the same point. Boom, boom, boom. It's like 1.5160 level, right? If you didn't take profits there, you could definitely take profits here. And if you, let's say you only took like 20% out and another little bit, you could take out the whole bag now, take all your money off the table, and then just be happy that you see it dumped, right? This is a little, almost an extreme example, but it's still right. This is a big W right here. This is June 27, 2024. Draw your big, your support right here. Boom, boom. It can be long term as well, but it's still a W. You see that? You just draw it up to the middle point, came down, and see how now it wants to go bullish. That's a large one. If we went up to like the weekly time frame, it'll look a little bit better. 1, 2, just like that. All right. Let's see what else can we find. So we found double top, triple top, even more, a large double bottom, small double bottom. We found one flag, kind of. Not the best looking one, but it's still a flag. All right here. Easy. M right there. It's a little tight, but it'll look better on the lower time frames. So this is on the daily. Let me hit the replay so just move us somewhere else. Let's cut the day in half, put it to the 12 hour. Looks a little bit better. Clear M. 1, 2. Alright. Clear M. 1, 2. Let's keep it moving. What else we got? We got a W right here. Just like that. 1, 2. Look at the time in between. 35 days before the right leg form to continue. You know, there's no real limit to it, as long as it's not like something, I mean, I guess there is a limit. You don't want it to be crazy, like if it just did this and all this wasn't here and it just took off, and then maybe not on this time frame, maybe on the weekly or a monthly time frame it would look better. So I guess there is no real limit technically in that essence. Let's see what else we got. Okay, we got a small triple top here on a lower time frame. These three right here. Watch. We're in the replay mode. Select. Let me press it right here, and then let's go to the 4 hours. Probably gonna look a lot better. Okay, we'll move this. We'll just tighten this up. We'll just adjust it to this time frame. 4 hour. We're at a 1.46. We're right above 1.46. 1.465. 1, 2, 3, and it's gone. And then maybe on the 1 hour, this might be just another M right there. Kind of. It's a little ugly, but kind of. Right? It's a little ugly. It's not really, it's not the best M. I probably wouldn't consider that an M to trade it. But you see it. You see understand the idea. 1, 2, 3, and a move. And it was an uptrend as well. So it's showing a sign of a reversal. Moving left. Let's see what else we can find. Okay, here's another triple top. 1, 2, 3. Here's an example of some consolidation. Price just moving sideways with no real direction. You know, it was coming downward and it was just moving sideways, just choppy, up, down, up, down, up, down, up, down, up, down, week by week. This right here is untradeable for swing traders. This is not what we want. We want moves like this. We want these type of moves, right? These big moves. From like, we want to catch them from like the top and the bottom. Right? Collect those hundreds to 1,000 plus pips over weeks, days and weeks, depending on how fast the market moves. The people who can trade in this type of range would be like scalpers on the lower time frame, the 5 to 15 minute, because there's some moves that do happen in here, but you're just on the lower time frame, so it's smaller moves. But if you have your strategy set up properly, your risk and reward, you can still make a bag in here. Just not for me. I'll sit out of this for sure and go find a different pair to trade, if there is any. Right? There are any at the moment. So usually are. Day traders, kind of. It'll probably be more so a lot of break evens, maybe some losses, quick take, quick profit taking, um, maybe. But yeah, this is mostly a scalper's market, this type of thing. This lasted for about 60 days, give or take, maybe 50, 60 days. That's a good amount of time. Let's see if we could find something else. This could be a minor bearish flag. Pull. Didn't really have like the highs and lows here, but you know, you see the gist, you see it. Okay, and I'll draw this right there. Boom, 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 boom. Lower time frame, it probably looks a little bit better, but for the sake of time and doing this again, I'm kind of going through it a little bit faster. I'm not gonna skip over anything and make it a little too rushed, but and then we have a big M here. It's a little ugly, but it is an M. One. Have the low down here. If this was higher, it would have been solid, but this one came higher, so we're gonna count this one. Two, and then it continued its move lower. Up, down, up, down. Right? So remember your support and resistances from the last video would be your major reversal points. So like right here would be one, right? But price obviously never came back up here. It ended up making a new one down this level. So this was 159,000. It made a new one over here at 157,000, and it ended up respecting it a little bit more. Oh, but look at that. But this was an M, which was a part of this one actually. So no wonder. So price already hit this one for the second time, and then it made it another one down there to solidify the downtrend, right? So the patterns are pretty smooth. Those are the main patterns we could go to. So this is looking at them on Forex. We could go see. Let's see if we could find some on. Let's see if we could find some on a stock, just to make it make sense. I have a whole stock. Let's see. Let's think of a stock. I have a stock playlist actually. Stocks. Let's take a look at Amazon. It's the first one I looked at. Okay, we're on the daily. Let's go to the 3-day, just so we can fill in some gaps a little bit more. Well, didn't really fill in any gaps. By gaps, I mean this is like Saturday, Sunday, holidays. Let's see if we could find any weekly. You look a little bit better on the weekly. It looks a little bit better on the weekly. Weekly might be a little tougher to see the patterns, but let's see. Might be able to see them better like this actually. Let's go to the 3-day again. Alright, let's see if anyone sees anything. I was gonna say let me know, but I'm not live. Not a live stream. This is kind of a double bottom right there. Just didn't last that long. 1, 2. It did make a nice move up, but ultimately dropped. Alright. We have a small M pattern here. This is probably on the lower time frame. Small M right there. Okay. What else we got? Another small M right there. Nah, won't count that actually. This is moving pretty sideways. I'd say this was a W, but it was moving pretty much sideways the whole time just because of all this in the middle. So yeah, this wouldn't really be a W, but I just wanted to draw it out real quick. But this could be a inverse head and shoulders, actually. You see that right there? Let's go on to the candle. Let's see. Yeah, so this is most likely a head and shoulders on the inverse head and shoulder on the lower time frame. Let's drop to the day. Oh boy, I keep forgetting it'll move here. Let's move to the left, move to the left. Yeah, it looks a little bit better on the daily. So we have the left shoulder make a support, came back above, broke below, came back above, respected that support structure that the left shoulder created, and then went higher. Okay, let's switch back to the 3-day, see if we can find something a little bit easier. seeing much. Not really seeing much. I'm not gonna lie. Not seeing much. It is a little. To me, it's a little tougher to use the line chart. Let's see. But it's easy. Oh yeah, see, and it's easy. It's a little bit easier for me to use the candle, so I'm just used to it like that. There's a W right here. One. This is on the week of Halloween of 2014. And it took about 84 days before the right side of the W formed, and then it took off. So from an investing standpoint, you're looking at Amazon. You know, wherever you're at, you could draw this, and actually it's a triple bottom. Let's drag this out to the left a little bit more. One, two, three. So how would we look at this? How would we look at this in real time? Alright, so we see that the market reached a high at a point. 2013, 2014. Wow, Amazon just reached $22. That's insane. That's amazing. It's booming, right? Okay, now it just hit this level. And now it's rising up. Okay? So now it has made a lower low. Sorry, a higher low, excuse me. So now the market just made a higher low. So what we would want to do at this point, right? To say this is real time. It made this level in May, mid-May, and now we're in mid-June, right? After learning what we just learned, we would hope to see this make a W to confirm that we're possibly that this is a support and it's not just gonna break lower, right? You don't want to just put your money in right here. If this move already happened, actually, this is what we're planning. This is today. This already happened. What we want to wait for is this, right? We need to see this. We're not gonna put our money in that right now. That's just it's not educated. It's not an educated move. Yes, it is a long-term investment. So either way, but what's to say that the market doesn't just crash and just start going lower, right? There's like, what is to say that this thing doesn't just go right back down to fucking $5, $6, $7? Excuse my French. Right? We want to be educated with this. This is what these videos are for. You want to be educated in what you do. You want to have this in your back pocket so you're not blindly putting your money at risk just because some headlines say so, just because your buddy says so, who turns into a big time investor when the markets start moving all of a sudden, but they're not when the markets are not doing well, right? So if you pull out your phone, you see this, you're like, damn, Amazon just made this little move. It's at $16. Let's see if we could get in at a better price, back down to like 14. You know, it's a $2 difference, but percentage wise, it can make a big difference, right? So you can load up down here versus up here. All right, so let's let this play out in real time. The only other option scenario that we'd be looking at would be I guess this could be a support as well. So now we see that we have a little bit of resistance up here. So now it's even another confluence as to why we want this move to play out even more. We have a level that broke and retested, gapped with low, and created a low, a higher low. Now it's over here, a little bit of a wick on top, potentially rejecting this level as a resistance. So absolutely, since we're investing and we can't speculate on the downside, we can't make money off of it going down, we're going to just play the good old waiting game. You know, keeping your money out and not losing it is always a win, right? It's only a loss if you see that it's an opportunity as a win and you don't act upon it. Then you missed out on a potential bag, right? You want to make educated decisions on what you know and what the market, what the world is telling you. Not the headlines, but what's really going on behind the scenes. Okay, I'm going to let this play. It's going to move fast. Let's see if price comes back down for us. Okay, price moved higher. It gapped down over the weekend. What is this, Tuesday? This is a 3-day. Okay, yep. So it's Sunday, Monday, Tuesday, and a little gap for Wednesday, Thursday, Friday. So the week ended lower at 15.97 now. Let's see. Let's see. Can we come back down to 14? All right, here we are. You see, yo, look how long it took though. So we saw it up here to down here, 146 days. This was in June. Now you're getting ready to put your money in November, right? It's a long-term game. You just saved yourself from watching your profits go slightly up, slightly down, all in between, back to the same. You just saved yourself a bunch of hassle. You could have used that same money that most people would have thrown their money in up here or up here. You could use that same money for your day-to-day life, all in between while you're still working, getting some more money. You could possibly have even more. You probably had $1,000 you're willing to put in. Now you might have two, maybe 1,500, maybe two, maybe four by November, right? Now you could put your money in right here because now we have a what? A double bottom. Now we have a certified double bottom. Price went up, made some space, came back down. Nice bullish candle to respect. We'll go over candlesticks in the next video. It's gonna take a while, so that'll be a long one for sure. You have a nice bullish candle, showed some buyer strength. You invest your money right down here, right where you wanted it too, right where we wanted it. $14, just shy of 15, 14 something versus up here at 16, almost 17. Now let's see if this plays out. It might make a triple bottom, it might break lower. Let's see, from the information that's given to us on this chart, this is the best decision that we wanted, right? Let's see if it pays off. Okay, made a triple bottom. Boom, look at that. Guys, look at this. This shit is not made up. You're seeing it in real freaking time. Real time. This is how you do it. This is how you invest. This is how you trade. Look at that. Look at that. This is not a coincidence. You just caught it. Now, when I say that, grain of salt a little bit, just because, like I was saying earlier, just because the patterns play out, right, it's a probabilities game. The same way it just blew up is the same way it could have just went downwards, right? It's just probabilities. It's more likely it'll go up versus down. That's the risk you play with investing and trading. It's not gambling where you're putting all your money on the line. You have some information to work with. You can paint the picture. Simple, just simple boxes and market direction. We're already in an uptrend, right? So we're not gonna look for it to go lower. If it's clearly been going up for years, look at this. You've been just looking at it. 2010 plus, just a straight incline. Slowly but surely, it's going up year after year. So why would we just assume it's just gonna fall, right? Or not? We're gonna look for the signs of it continuing bullish and going up, right? So it was coming down off of this is a little pullback, not a downtrend, just a pullback, right? It's a mini downtrend. Whole bullish move, it has to give a break somewhere for people like us to get in how we did. So in case you missed this one, this is super early. It's kind of lucky too for someone to do that, to get in right there. But most people who get in here, or most winners, which would be the minority group of investors and traders, would get in here. A lot of people would try and sell, get in up here, get in up there. You know what I mean? If you got in up here, you're lucky, but again, it's not really educated. Unless you're trading a breakout strategy, it's a whole different thing you can get into. Or you could get in here on the third one. In case you missed this in November, you're on vacation, it's family time, you're getting, oh, this is actually Halloween weekend. Right? But you could be on holiday, you might miss it, you might come back, you're like, damn, this shit might take off up here. You get one more chance right around Christmas and New Year's. Or right after Christmas, New Year's. One more chance. And then a few weeks later, January 26th, boom. Boom. Your $14, your shares at $14 are now 82% in profit over another 8-9 months. So you just put in $1,000, you got 1,000 and how you doing that? Before I even say that, I was about to say some crazy shit. I was about to say $1,080. You have $1,800. If you put in 10K, you got 18K. It's almost a 100% return in 8 months. You put in 10K, you're at 80%. 80% right there. Yep, that's 1,800. 18,000. Excuse me. You just made 8 grand doing nothing because you waited properly. Versus getting up here at 16. Still a decent chunk of change, but now that's 56%. These percentages add up, y'all. You want to do this shit properly. The percentages add up. 56% versus 80. Yeah, 10 grand. That's 5,600 profit. 15 grand or 18 grand. It's 3 grand difference, but still, that can make a big difference. That's an extra 3 grand that's in your pocket for doing nothing except pressing a button at the right time. As crazy as that, y'all. Once you understand this and really get in your bag with it, and if it makes a lot of sense, and you really try and pursue it as a trader, we could trade the upside and the downside. Game over, dude. But that pretty much wraps this up.